Hi, I'm Marissa, and today my group will be present on the case 2. Alright, so as you can see in the slide, these are the accounting period of 12 months by Bubble Chip Enterprise. Next, moving on to the information given by the question, where we will be extract this information into SOPL and SOFP tables. So this is SOPL before the adjustment. This is SOFP before the adjustment. We have to calculate the accumulated depreciation for previous year because this case does not straightforward provide us the amount of accumulated depreciation. Therefore, as you can see, this is the working how to get the accumulated depreciation. Finally, we will look into the 11 adjustment that needed to be done for this case. This is the adjustment 1 for Bubble Chip Enterprise, where it clearly shows about the closing inventory. Now, we will look into the calculation for adjustment 1, where the closing inventory amounted to 5,000 will be included under the SOFP and SOPL table later. Moving on with the SOPL table after the adjustment 1, where 5,000 ringgit of closing inventory will be minus with the cost of sales to generate gross profit. Next is the SOFP table after adjustment 1, where it includes the closing inventory of 5,000 under current asset. Furthermore, we will look into the adjustment 2, where it clearly shows us that Bubble Chip Enterprise has not fully received its rent. So, as you can see, there is a timeline to clearly show you that Bubble Chip Enterprise has only received rent for 10 months amounted to 2,600. Meanwhile, they yet to obtain another 2 months of rent, which amounted to 520. This is called as accrual. So, how do we calculate accrual is shown here. So this is the SOPL, which included the rent that shall be received by Bubble Chip Enterprise, 3,120, after it has been added the accrual amount of 520 ringgit. Lastly, this is the SOFP table after the adjustment 2, where the accrued rent received of 520 shall be put under current asset, as tenants still own Bubble Chip Enterprise 520 of rent. Therefore, that's all from me. Now, the presentation will be continued by Nurin Uzma. Thank you.
Thank you, Marissa, for the great explanation. I'm Nurin. We'll continue from here, adjustment 3 until adjustment 5. In adjustment 3, 3,000 ringgit of cash sales hasn't been recorded yet. So the account involved in this transaction when sales of goods by using cash is firstly, sales increase in credit side, secondly, cash increase in debit side. Therefore, due to this adjustment, both accounts must be added by 3,000 ringgit in SOFP and SOPL later. Referring to this SOPL table, the sales column is added with 3,000 ringgit, which equals to 40,560 ringgit. And for SOP table, cash in current asset column is added with 3,000 ringgit, which equals to 6,598 ringgit. For adjustment 4, 150 ringgit of utilities has been paid in advance, while 200 ringgit of rental expenses still owed at the end of the year. It means the utilities paid for 12 months amounting 610 ringgit is included with 150 ringgit of prepayment. Next, 1,200 ringgit is the rent expenses has been paid, but it is not enough as they still owe 200 ringgit and that makes it as accrued rent expenses. As you can see, these are the effects of transaction based on the above adjustment. Based on this SOPL table, we can see here that the amounts of utilities expenses and rental expenses that shall be paid by Bubble Chip Enterprise is 460 ringgit and 1,400 ringgit correspondingly after it has been deducted with 150 ringgit for utilities paid and after it has been added 200 ringgit for rent expenses. For SOFP, the prepaid utilities of 150 ringgit will be added under current asset and the accrued rent expenses will be added under current liability amounting 200 ringgit. Next adjustment is, there is an additional bad debt amounting 350 ringgit from Jensen was written off, meaning that this will increase the company's expenses and reduce the account receivable as the debt will never be able to collect anymore. Thus, these are the effects of transaction on bad debt for debit and credit as required in the adjustment. There is an increasing amount of expenses on SOPL because of the bad debt, 350 ringgit, while in SOFP, there is a deduction of 350 ringgit on account receivable in current asset from 6,650 ringgit to 6,300 ringgit. That's all from my part. Aisyah will take the lead for the next adjustment. Thank you.
Thank you so much, Nurin, for explaining it very well to us. Now, I'm Aisyah. We'll continue on the following adjustments. As you can see, this is adjustment 6, which shows that insurance is yet to be fully paid by Bubble Chip Enterprise. And this is the timeline that shows Bubble Chip Enterprise has only paid 1,350 ringgit of insurance only, and they still owe 400 ringgit at the end of accounting period. And this is what we call accruals. There are two accounts that are involved under this transaction, which is insurance under expenses and accrued insurance under current liability. And this is the SOPL that shows Bubble Chip Enterprise needs to pay 1,750 ringgit of insurance after it is being added up with 400 ringgit. Next is straightforward accrued insurance of 400 ringgit under current liability as Bubble Chip Enterprise are still in debt. Now we're done with adjustment 6 and we'll move straight to adjustment 7, which shows that Baba Chip Enterprise has decided to allocate 4% of debt that may not be collected. Before I continue with the adjustments, I will first explain on the net account receivables. It is the total amount of money owed to Baba Chip Enterprise by its customers minus the debt that has been written off. And this is a calculation to get the value of increase in AFDD, which needs to be placed under expenses later. And also the value of a new AFDD. What I mean by new AFDD is an updated AFDD by Baba Chip Enterprise now. This is its OPL, which shows the value of increase in FDD by 122 ringgit, amounting to 472 ringgit in total. And also lastly is SOFP, which shows the FDD with its nature are to reduce account receivables by 252 ringgit. That's all from me. Now we will move forward to my friend Naida. Thank you.
Thank you so much, Aisyah, for the enlightenment. My name is Naida Afiqah and I will continue with adjustment 8 and 9. First off, for adjustment 8, the loan was obtained on 1st July 2020 and the 5% annual interest was still outstanding at the end of the accounting period. Since interest is considered as expenses, therefore it will be on a debit side, whereas accrued interest will be on a credit side as it is current liability. According to the infographic, Bubble Chip Enterprise has made a loan from my bank amounted up to 8,000 ringgit and the annual interest is 5% equivalent to 300 ringgit, in which has yet to be paid at all by Bubble Chip Enterprise. For SOPL, the interest on loan will be 300 ringgit, meanwhile for SOFP, there will be accrued interest on loan amounting up to 300 ringgit, in which Bubble Chip Enterprise has not yet paid the interest. Now, let's move forward to the adjustment 9. The owner had withdrawn 500 ringgit cash from bank and 450 goods for his own use. This is considered as drawing as money, either cash, check or even asset that is taken by the owner from the business for his own personal use. In this adjustment, it involves 3 accounts which are drawings, bank and purchases. 500 ringgit comes from cash at bank, meanwhile 450 ringgit comes from goods and it's amounted up to 950 ringgit Malaysia. Drawings will always be on a debit side as it reduces capital, meanwhile bank and purchases will be on a credit side. For SOPL, since the good is taken from the business, therefore 450 ringgit will be deducted from the purchases. As for SOFP, since the cash is taken from bank, therefore 500 ringgit will be deducted from bank under current asset and 950 ringgit will be added on for drawings under owner's equity. Now, I'll pass to the last presenter, Azdamia, to continue the presentation.
Thank you, Naida, for explaining adjustment number 8 and 9. Now, Azdamia will continue to explain on the rest of the adjustments. Now, we look at adjustment number 10, which 1,200 salaries for the year is expected to be paid in April. This means 1,200 is not accrued yet in the accounts. We have to accrue 1,200 salaries, making it a total of 5,305 in the SOPL for the year. The same amount need to be recorded in the SOFP and the accrual salaries accounts. The entries are as shown. In the statement of profit or loss, the total salaries of 5,305 is reflected here. On the other hand, accrued salaries of 1,200 is reflected under the current liability here. Moving on to adjustment number 11, which relates to the depreciation for the year. As you can see, depreciation is to be calculated as indicated in the slide. Before we continue with the adjustment, I will first explain that the value of non-current assets will decrease over time as a result of being used. The calculations are inserted here. Depreciation of office equipment is calculated based on 20% of the cost, amounting to 2,156 ringgit. Motor vehicle is depreciated based on 20% of net book value brought forward at the beginning of the year, amounting to 2,880 ringgit. Lastly, furniture and fittings, depreciation is calculated 10% based on the reducing balance method, amounting to 350 ringgit. This is the accumulated depreciation for the previous years. Depreciation calculated in the previous slides will be debited to the statement of profit or loss under the expenses category and credited to accumulated depreciation in the statement of financial position. In the SOPL, the depreciation of each category of non-current asset is reflected here under expenses amounting to RM2156, 2880 and 350 correspondingly. On the other hand, in the SOFP, the accumulated depreciation is reflected here with its nature of reducing the non-current assets of Bubble Chip Enterprise. As you can see, the accumulated depreciation is totaled up from the amount of accumulated depreciation brought forward from the previous years, amounting to RM3234, 6480 and 350 correspondingly for each non-current assets. Taking into consideration of all the adjustments, this is the final adjusted statement of profit or loss of Bubble Chip Enterprise with a net profit of 4,412 ringgit. On the other hand, this is the final adjusted statement of financial position of the company with a healthy net assets of 33,062 ringgit. That's all from us. Thank you.